Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. At present, the Australian dollar continues to face significant market noise as it slowly edges closer towards 65.5 and with the key level above at 66, figure 30, which aligns with the 60-day simple moving average. Also this week, the market is packed with economic data, which views the Federal Reserve facing two key points. That is Jerome Powell's testimony to Congress and the release of the February jobs report. The non-farm payrolls data holds more market moving potential though if the job gains exceed 190,000, which would signal ongoing inflationary pressure and impact market sentiment and the Fed policy expectations. While in Australia on Wednesday, we've got the GDP with a forecast of 0.3%, up from 0.2%. And additionally, China's data on Friday, which will be focused on the CPI yearly and the PPI. Any pullback for the Australian dollar views the support at 64.80, which has served for the last couple of days. As we can see here, an inverted hammer rejected and also Friday's price movement. The euro regains some of its losses as the dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped to 103.88. Beside the US data this week, all eyes will be looking to the European Central Bank or the ECB interest rate decision, which widely expects no move, but keep a very close watch as many anticipate a 25 base point rate hike in June. Looking at the technicals, the euro looks towards 108.50 or even on towards its topside target of 108.80. A break there would see further extension and a tough resistance at 109.35.40 with any pullback see support at 107.65 to 75. Very whipsaw price action for dollar yen as the market now looks potentially to a weaker play after recently the Bank of Japan has been talking about monetary policy shifts. And the fact is that the price target being in sight, that is talking a little bit more to the dovish side. Look to Tuesday because we do get the Bank of Japan's governor speaking. No doubt could cause a bit more in terms of volatility. And if so, could see a slip towards the bottom side of this range around 148.15.20 as the potential call and reassess from there. A little bit more to the upside when it comes to sterling from Friday. We can see here looking very much to the challenge I feel around 127.15.25 this week. With little economic data out, it will be on the US mainly, as I mentioned, the non-farm payrolls, and also keeping an eye on the US dollar. But overall, though, I feel if we clear 127.15.25, it looks towards 128.5 as a potential target, with any pullback minimal with 126.05 as support and a base still holding relatively well at 125 to 45.50. A huge surge in gold on Friday and put it to a 2-month peak following subdued economic data that strengthened expectations of the US interest rate cut by June. But still, the market is still heading towards this blow off top, which is anywhere around 2,130 to 50 area. And the reason behind that is that we cleared the level of 2,051 to 56. Any pullback expected to be shallow and see support around 2,075 and then our temporary base at 2,062 to 4. Wrapping up with oil, since the market cleared that topside level of 78.5, the trajectory from this inverse head and shoulders still holds at 81 to 83 and reassess from that topside. Well, that's about it. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new week.